Hey, I wanted to talk very quickly this morning about something that comes up all the time in this day and age is rate holds. And can you? I thought I could hold my rate for 120 days. Now it's true that there are some rates that can be held, but here's the thing: rate holds generally a myth. A few things to be aware of. First of all, a lender definitely has not looked at your property before they offer you a rate hold. So, especially in these rural areas that we work in, it's very likely that the lender will do one of two things: decline the property completely, or two, at least amend the program to a different type of securitization that could affect your rate. So, these are all things why I'm very leery about locking in clients on rates, because there's a good chance that will not be applicable. They also do not, some of them do, but the vast majority of them have not pre-approved you, so they may decline you as a borrower. Now, no matter what anybody tells you, any bank or any broker, if you're putting less than 20% down, the mortgage insurers have definitely not seen that deal. And if they haven't seen that deal, there is the chance they can turn you down, and that rate may not be applicable. No matter what anyone tells you, that is a true story. So that's a really a big problem for rate holds as well. Secondly, the vast majority of the time, the rates that we're choosing for clients are 30-day click closes, particularly on purchases. We are, the cheapest rates are deals that close as quickly as possible and not the 120-day rate hold. So we're barely using those rate hold rates. On top of all that, a lot of the pre-approved rates we held are premiumed because they have to hold that money for you. And so there is a premium for them doing that. And so in fact, if I go back on my 15-year career, the amount of times that we utilize a pre-approval rate, not once. So we do hedge our clients in for pre-approvals from time to time, and we do hold rates where we see it's applicable, but we definitely don't guarantee that, nor do we think it's a good idea to rely on that. Your best deal is going to come from 30 days away from when you close. Now, if we look at the past 120 days, and when we're talking about April 2022, people go, wouldn't it have been better to do some rate holds 120 days ago? You know what? The Bank of Canada has now moved rates twice, but that doesn't affect a rate hold. The vast majority of our clients are going variable, and we're recommending that, and we wouldn't recommend fixed. So, I think that is the story to be told there. And so I don't see any client that would have benefited from a rate hold. So anyway, conclusion on this is that rate holds are rarely a good idea, and they're definitely nothing to be relied on because they will not secure your place. And I don't want people getting anxious and thinking, hey, I got to buy a place for this date so I get that rate. So rarely is something to bank on. Secondly, it doesn't mean we don't pay attention to them. There is some that do affect people, and sometimes we'll throw them in and have them in our back pocket if applicable. Many times we're holding rates behind the scenes on things. We just don't want you to rely on that. We're holding rates where we see them applicable for our different borrowers, and then going from there. So anyway, if you have any questions on rate holds, again, rate holds very much a myth, but that's how they work, and we'll talk to you soon.